Welcome to the SpyTomorrow.com webinar on demand. My name is Rosh, and I'm the founder of SpyTomorrow.com as well as the developer of the SpyT trading methods. Now, what is Spy Tomorrow all about? Spy Tomorrow is about overnight swing trading. And it's designed for those who, quite honestly, are tired of the emotional ups and downs of day trading. And maybe you just don't have the patience or the time to sit in front of a screen during the day for a couple hours or the entire day. So I personally think there's a better way to have a high risk, high reward portfolio without day trading, and that is overnight swing trading. So this type of trading is for the high risk, high reward investors or traders, meaning you have a section of your portfolio that is for high risk trading. And it's not your retirement account. It's not your savings or your money that you need for emergencies. This is money that you can lose. That's how we define high risk sections of our portfolio, because there's opportunities out there that we want to take advantage of, but sometimes you run into an opportunity that doesn't work out so well. Maybe day trading just didn't work out so well. That should have been a part of your high risk portfolio, for example. Now, overnight swing trading, I think is better because, day trading, you're going after little moves in the market. And quite often, many day traders find that they may make a nice win, but they have bigger losses, or maybe they have more losses than wins, and over time their account just starts to dwindle. And not only that, with day trading, you have the opportunity to just let those emotions go. You need to have patience. A good day trader is patient. And if you don't have that patience, emotion is honestly what sinks most traders. And I think that's another advantage of overnight swing trading, which I'll explain in a moment. So rather than going after these little moves throughout the day, we're going after one big move overnight. And we refer to that as the overnight gap. You've seen it. The market closes at one point at the end of the trading day and then opens up the next morning either up or down. And we generally at Spy Tomorrow focus on SPY because we believe understanding your ETF or stock well is an advantage over, say, screening for stocks. If you're screening for stocks, you don't know much about that specific stock. You don't know how it reacts overnight or during the day or during certain markets or news. But if you're trading the same ETF or stock over and over again, you really get to understand the nuances and how it trades in different environments. So we have multiple websites. We have QQQ tomorrow, for example, but we'll focus on SPY here, but there are different ETFs that we can focus on. Now, SPY, very specifically, is an ETF, an exchange traded fund that mirrors the S&P 500. And as an ETF, it's a diversified ETF that moves up and down with the market. Now, take a look at this chart. What you're seeing here, and this is one of my favorite charts, is the beginning of the SPY. It was launched in 1993. And if you had bought SPY in the morning and sold it in the evening, well, you might have been up a little bit, or in some cases have even lost. However, if you had bought at the end of the trading day and sold it in the morning, well, you'd be up over 1,000% during the time frame here displayed, which is just a couple years off from now. I don't think I have an updated version quite yet, but I'm going to assume it's about the same scenario, especially the way the market has run the last few years. So what are we trying to do? Well, back to the overnight gap. What this chart is telling us is that the action is overnight. And so rather than a bunch of small trades during the day, we're going after one trade. Now, there's something about that chart. If you notice, it is showing you if you bought at the end of the trading day and sold in the morning, you would have made, again, quite a few 100% profit. However, it's only based off of if the market goes up. You're a winner if the market goes up, and you're a loser if the market goes down. And the market went up about 54% of the time during that time frame. So that means, you know, we had the advantage there. The market went up more than it went down. And so traders were able to profit during that time frame. But that kind of leaves us to this question of what if? What if we could do better than 54%? Well, if we could do better than 54%, it wouldn't be hundreds of percent gain, it would be thousands of percent gain, would it not? And honestly, we want to take that emotion out of our trade too. Because let's be honest, only about less than 10% of day traders actually make money. And, I'm in awe of a great day trader who has the patience, has done some back testing, and has actually applied their ideas to the market and has done well. I mean, that is somebody to admire because they're making a living and growing a portfolio day trading. For me, I'd like to take that emotion out. I like that one trade overnight. And there are three parts to being able to trade like this. First part is knowing it's a short-term trade. It's the time. It's overnight. End of the trading day, generally buy at say 3:59 at the end of the trading day, and we'll talk about what to trade in a few moments. And then sell first thing in the morning if that's your plan, but you could also sell at 10 o'clock or 11 o'clock, and we'll talk about why that may be the case. But there's something else here. We need a signal. We need a signal that is better than 54%. Maybe a signal that's 60% correct or 65 or 75% correct. Look, there are always going to be losing days because just because we measure what we refer to as the pressure at the end of the trading day that often correlates to how the market might open the next day, just because we measure a positive at the end of the day doesn't mean something couldn't happen overnight. For example, news, maybe an earnings report or a government report like CPI or PPI that could change the mood of the entire market. It happens. So you have to plan for that. So you can't just put all of your money in the market. You have to understand what your risk tolerance is and to take a percentage and to be very disciplined about that percentage. Maybe it's 5%, 2%, 10%, whatever it may be, depending again on your risk tolerance, and put that money in at the end of the trading day and then sell it the next day based on the signal. Now that's where we come in at SpyTomorrow.com. We have a signal and it's free. There's the good news. It's free on the front page of SpyTomorrow.com. It's available at 4 o'clock Eastern Time, right after the market closes. And those who are members can see it a little bit before the close so they can make their decisions again before the market closes. They can decide how they want to trade. So there's a little bit of advantage and as well as some other technical information. So quite honestly, it says up or down, but it doesn't say how strong that signal is. And that's where the membership stuff gets into play. But you don't want to become a member immediately unless you know why. Why would you want to be a member? Up or down, quite honestly, look, if you have 60% successful trades with just an up or down signal, you may not need to be a member. But for some people, they want more information. They want that signal before 4 o'clock. They want to know what is the underlying mood of the market. It may show up, but the underlying mood still may be down. So it could be a quick up in the morning and then straight down. There's that type of information that can be helpful in the process. But that's not where we start. We just start with a signal. And we also consider the type of trade that we want to make. Do we want to be aggressive? Again, some of the confidence numbers can be helpful, but ultimately, you should just be consistent in the beginning. And quite honestly, you should probably just paper trade in the beginning to make sure it's right for you. At 4 o'clock, go to the front page of spytomorrow.com and see is it up or down signal, and then just paper trade what you're going to trade. What are you going to trade? Well, you could trade stock straight up. You could trade the ETF if you want. So you could trade, say, a stock within the SPY, maybe one of the top 10, Google or Tesla or Microsoft. I believe those are all in there, the top 10 off the top of my head. Berkshire Hathaway. I mean, there's all those different stocks that are available in the top 10 that you could, but you could also consider an ETF that, well, is similar to SPY, like QQQ, but it's more aggressive. So maybe you'll get a bigger move. You could also consider a leveraged ETF, such as the TQQQ or the SQQQ. TQQQ is a leveraged ETF 3 times. So if the market goes up 1%, you actually get 3%. And if it goes down, if you buy SQQQ, that's shorting the market. So you can go either direction. TQQQ for up, SQQQ for down, and you can play both directions, which can help you increase well beyond that 54%, not just depending on the market going up. Now, if you want, you can also consider options. And options, that's the big way to really bring in the profits that I think a lot of people who are high risk, high reward traders want to go after. And the nice thing about options is you'll never lose more, like a stock, never lose more than what you put in. But again, you have to understand your risk tolerance. Are you going to take 2%, 5%, 10% of that portfolio for each trade, that position size? So understanding what is your risk tolerant position size. That's really important to consider. And again, by trading, because when you start using real money after you paper trade for a while, it's a different attitude. And I'm sure you've experienced, and many of you have experienced this with day trading. And there are a few ways you can do this with options that I like. And the SPY T trading method really is founded on the principle of, say, a 2-to-1, 3-to-1 options ratio, meaning we have a hedge. Now, I do like to trade directionally with a small directional option when I have confidence in the signal. Looks like everything's glowing up. I may just buy a call. But if I'm unsure, I may want to consider a SPY T trade, which may be a 2-to-1 options ratio, meaning I'd buy 2 calls to 1 put. And that put is the hedge. And if for some reason something crazy happens overnight and the market tanks, I could actually break even, lose less money, or even possibly profit. And there are a few ways to go about it. You can base it off of, say, at the money calls and puts. So you buy 2 calls at the money, 1 put at the money, or you could buy it based off of the dollar amount. Let's say a call is $2 and your put is $1. So that's kind of, or $1 call and a 50-cent put. You can also base it off of delta. And what you'll want to do is at the money is generally 50 delta. So if it's a up signal, you'd buy a 50.5 call delta and then a negative 0.25 put. And that again is a generally actually around a 3-to-1 options ratio much of the time. And I really like this. It's more of an exact science. You can kind of measure a little bit better what the risk reward is and what you need to, how much of a move you need overnight for your trade to be successful. And that's also important to remember too, is that when trading options, you're going to have theta, time decay overnight. So you're going to have more time decay closer to the expiration. So a 1 day overnight trade, 1 day DTE, date to expiration, is going to go down in value overnight a lot faster than, say, a 10 day. But at the same time, that 1 day is going to move up a lot faster than the 10-day. So there's always give and take. So a little more safety with a further out date till expiration, but you're going to have more of a move with your closer to 1 day expiration. And I want to share a little bit about that because for a long time, I would say 4 to 7 days was my sweet spot, days to expiration. And, look, if you don't want to deal with that decay, you can certainly use, say, the TQQQ and ETFs and buy the stock directly. But those of us who are looking for those bigger moves, we're looking for those 4 to 7 day expirations. You don't want to go too far out. 30 days is probably way too far. And I've had some conversations with friends, and some of them were saying, "Oh, we're using, 1 day." In other words, the option expires the next day. Like, man, that theta is going to cut it in half overnight. I mean, I don't know if I could do that. It didn't seem right. But over time, I kind of discovered that the 1 DTEs are not as bad as I thought. Yes, you can lose half your value overnight. They're also less expensive. And when you do have a move, you're going to shoot up and you can double your money very easily overnight, a lot easier than maybe a 7 day till expiration or a 10 day. You need bigger moves. But here's the thing, you have to have a move no matter what. And that's where you have to weigh an ETF, which look, if it goes down, it goes down, it goes up, it goes up, but if it stays flat, it's just going to be flat. You're not going to lose money just because the market didn't go anywhere, which is not the case for options. And that's something you really have to think through to know that sometimes you may be right, but the market only moved a tenth of a point up when your indicator said up and you still lost a little bit of money. Now, that's where patience can come into the game and say, look, if you feel like it's going to continue to go up, well, then you can start to make money a little bit later, not right at the open. Maybe it's at 10 or 11. And that's quite often what we'll do with our exits. And the exit is probably the most important part of this whole process. It's easy to buy. And again, I recommend you buy at the very, very end of the trading day, very end, and then sell the next morning. But you don't have to sell immediately. Learning how to exit is really the difference between being a winner and a loser in this overnight swing trade. And it's the same with day trading too. Patience, understanding the market, where the market's going, where's the pressure? Is the pressure moving down? So it opens up your way, but is it looking like it's just going to go right down to a negative? Or is it starting off a little negative, but you know the pressure's up, and if you just wait a little while, you're going to be in the money. And those are the kinds of experiential elements that are so important in terms of your exit. Understanding, and that's why trading the same option, trading the same stock can be so helpful because you have a sense of how the market's been treating that ETF or stock overnight multiple days versus, again, screening for a stock and you really just don't know how it reacts. It may be set up the right way, but you really just don't know. So one of the things that we do in some of the markets is actually take all the emotion out of it and just sell at a specific time. So we'll buy at 3:59 in 50 seconds at the end of the trading day. And then based on our signal, either up or down. So we buy calls if our signal said up, or puts if our signal said down. And then we would set our trade to sell, say at 10 o'clock or 11 o'clock. And it's not a hard and fast rule that it's the same time every time. It often depends. Sometimes markets just have a certain pattern that you've noticed, and it'll work that way for a few months. But know that it can change. Sometimes it starts up and goes immediately down, like every day. It seems like that's all it does. It starts up and goes down, or it starts down and goes up over and over and again. And it's the same pattern. Well, you can take advantage of that and get even more of that emotion out of it. Just sell. Sometimes when I have a SPY T trade, such as call and a put hedge, I'll lose a little bit more money or not maximize my gains because I didn't do a good job exiting. But there are some opportunities. If you know that, look, the market's going to start up and quite often goes down, well, you can sell your call in the beginning and then follow your put all the way down. That can be a really nice trade. So that's a more manual trade. But if it's not working out, and sometimes you look, you just don't have the patience and you just want to get more of the emotion out, just set a time. And it can be, you can start off just 9:31, get out every time, or maybe 10 o'clock or 11 o'clock. A lot of times, a lot of markets, the peak of that trading day is 11 o'clock. And so 11 o'clock is a good time to get out. You just have to watch the trends. And so everything is, in a sense, automated. It's one trade overnight. You're taking advantage of that overnight gap. You have a signal that is well above 55% correct. And again, you have to just watch out for news. What type of news is expected? And if you're unsure or you think it could go any direction or it's neutral, sometimes the signal is neutral, maybe you just step aside that day because that's good quality management. And that's really what it's about. It's about maximizing our gains and minimizing our losses and learning how to do this over and over again each day, knowing when to trade, when not to trade. A mature trader is going to win over somebody who feels like they have to trade every night. You don't. You have a signal that can give you some sense. If you're trading stock, well, just go up on the up days and don't trade on the down days. There's so many ways to use these signals and support signals to help make you a better trader. So, I started this whole process about 5 years ago. And it came from just working with numbers, and it was actually trying to develop another calculation. And that calculation ended up kind of correlating to how the market was opening and closing. And so I started straight up with spreadsheets and started building off that, and eventually got really good. I gave my wife some money and said, "Here, look at this. I made an extra couple $1,000. Yay!" and take it. And that started the whole thing. And then eventually some of these algorithms kind of broke, and I had to adjust them. I even, opened up Spy Tomorrow and then had to shut it down a couple times because the algorithms broke. And I didn't want to present something that was going to, lead people astray. That was not my idea. I wanted to share this for free. And if people wanted more information to become members and ask questions about, I mean, I can't tell people how to trade because I'm not a financial licensed person at all in the financial world. I can only show people, here are my algorithms, and this is how to use them. But if you want me to explain how, to use them, I mean, you have to decide when to buy, when to sell. That's just the bottom line. That's how it works. I programmed this stuff and I developed this stuff, and it's continuously gotten better and better. And there are many generations of algorithms that continue to get better and better. And my purple algorithm lasted 2 years, but it was a very manual process. And so this year I went fully automated with some of my processes, with many different ways in which I can pull information to work within my algorithms. And it's kind of nice. I didn't have to do a lot of this stuff manually anymore. And so we got into the blue algorithms, and now we have some really good algorithms that have continued to just get better and better and better. And the thing is, and now we're talking like let's talk July. So in July, the CV or LT algorithm, I use those interchange, but they're part of the blue algorithm package. In July, it was correct 27 out of 30 days. Now, let me clarify something here. What's correct? Correct is we met our goal of either positive, negative, or negative in that first half hour. So some days it's kind of a gray area. both sides kind of won. But there are a lot of days it's either up or down. And honestly, 27 out of 30 days was a feat. And two of those days were CPI and PPI, and they were surprises, and the market went the other direction. So there's nothing we could do about that. And then one was really kind of it was neutral. It really was not. It was just leaning up a little bit, and it went down. But at the end of the trading day, it was kind of trending down. So you could have taken an educated guess that we're going to have that down day, but officially, technically, it was wrong. But that's really, really good. I mean, that was 90% correct. We need better than 55% correct. So if some months, maybe based on your trading, maybe the algorithm was 80% correct, but your trades were, say, 70% wins. Great. That's fine. And that's just the exciting thing about it. No matter what you trade, you can work with your own risk tolerance. We have continuously improved algorithms. I haven't had an algorithm break in probably 2.5 years. And what I mean by break, it just means it just stopped completely working. Broken means it's just like going 50-50. That's a broken algorithm. But when it's, 70, 80, 90% correct, well, that's a successful algorithm that can help us grow our portfolio. And again, that's the one we have free on the front page of SPY Tomorrow. Wow. So that was a lot of stuff. There's a lot more, obviously, to this, but remember the three parts. We're trading the short-term overnight gap. It's a short-term trade. We buy at the end of the trading day. We sell in the morning. We can use a very small directional trade. We can do a SPY T trade with, say, a 2-to-1 options ratio if we use options. And of course, we have to have a signal. And you can have any signal you want. You can use a combination of signals. You can use the SPY Tomorrow signal on the front page. You could use the SPY Tomorrow and maybe a MACD signal or a signal you've developed. No reason why you can't create your own signal. And use those combination, maybe using two out of those three signals. Which direction are they showing? And that could be the way you approach your overnight trade. And then we sell in the morning, either manually or just timed, automatically selling at 9:45 a.m. However we want to do it. Again, based off of that market. You just have to be flexible and say, look, I'm going to have to watch the market and see what the trends are. What are the best times to get out of the trade? And you can always say, look, the market's still going up. I'm going to cancel that time trade and just let it keep going up if it's going my direction. So many ways you can approach this. But again, being one trade, it's not that emotional up and down during the day. It's just that one trade overnight. Hey, let's get into the questions. And this helps to clarify some of the ideas here. The first question is, am I guaranteed success if I follow your plan? And honestly, no, of course not. Look, 10% of day traders or less actually are successful. I'm going to suggest to you that the overnight swing trader, those odds are much better, but it still depends on the trader. You're the one who buys and sells. The main thing I'm offering is a signal, at least something to consider for that overnight swing trade to take advantage of the overnight gap. I'm telling you the pressure based on my algorithm says up or down. And then it's up to you based on your risk tolerance, how much you want to risk and the style of trade. If you're going to actually trade the stock, ETF, or options, it's a SPY T trade. You're going to put a hedge in place if you're really not sure. It's, especially in volatile markets, having a hedge is not a bad way to go. So, no, of course not. I mean, I can't guarantee anything. All I can do is tell you that we've had some very solid success based off of overnight swing trading. And overnight swing trading, again, is a high risk, high reward style of trading. And look, that's what we're looking for. And of course, it depends on the trader. If you can give the same signal to 10 traders and have 10 different results. Some will win, some will lose, some will break even. So again, up to the trader. but I provide hopefully a good signal that you can have confidence in. Okay, can I day trade using these signals? The answer is yes. In terms of during the day, I do have pressure signals available to members. I don't share that publicly during the day, but members have access to that if that's of interest. Now, I feel that my pressure signals during the day are not as strong, although they're getting better. Again, I'm continuously improving them, but traditionally they're not as strong as our overnight signals. So that's something to consider. There may be a better system for day trading. If you're going to day trade, this may not be the best platform for it, but I've had some really successful traders using it, usually like based off of 5 minute trades. Here's the pressure, over the next 5 minutes and taking these short-term trades. It's worked out pretty well for some people, but we always have to remember the bottom line is the system is designed for the overnight swing trader. All right. Uh, what is the minimum I should start trading? I would say minimum $1,000. That's a great question. You could with a very small minimum of 500, but if you lose a couple in a row, you're going to be down to, we want to trade a percentage. And obviously, 2 and 4%, we really want to, especially if you're trading one DTEs, you really want to be near the break even point. You want to be 50 delta. You want to be at the money or just in the money for those really, really short term trades. And obviously, it's not going to be much less than, say, 80, $100 when the volatility is low because the price of an option is based off of the time until expiration and the volatility on top of the value of the underlying asset. So if you are out of the money, that means the cost, that premium to buy that option is for the potential for that to make money. And some way down are a penny, and a penny means the potential is not very good. So it's the time till expiration, the day till expiration, which could be 1 day, 3 days, 5 days, 30, 60 days. But again, the movement and there's a higher price. There's a premium for those further out in time options because there's a longer period and opportunity that could actually become a valuable option. In other words, an option with intrinsic value. So generally, a one DTE option is in the dollar range, and if you're just inside, you have a little bit of intrinsic value, and if it goes your way, it's going to go up pretty quick in terms of value, and so that's something you want to consider. And if you don't have enough money in there to last through the downs, because there will be a couple days, 3 days, 2 days in which maybe the market shifted because of news, it's a volatile market, or maybe you just played it poorly. It's not always necessarily that the signal was wrong, but maybe there wasn't a big move or you waited too long and the market dropped and you ended up losing. It's going to happen. It happens to all of us. And so you have to plan for that. So using a minimum of $1,000, at least you're not going to risk more than 10% when you're starting out. You're probably better off with a smaller amount. And some of the best traders out there, they're using 2%, but they also have a larger portfolio too, or larger amount of money in their portfolio to risk. And so they take 2% or 1.5%. That's a good way for them to work and feel comfortable and be able to sleep at night versus say 20% of your portfolio in one overnight swing trade. So I like to say minimum of 1,000 is probably the safest. Is setting a time for exit really the best approach? It can be. If you're highly emotional and you just are not very good at exiting, selling your options in the morning, I recommend that you start doing that. And if you feel like you can get back in and be confident about your exit, then you can stop doing that. I mean, there's nothing that you have to do every time. You are in full control. So you can set it for 11 o'clock, but let's say, wow, profit at 10 o'clock is excellent. And maybe I'll just put a stop underneath. And if it, cancel the 11 o'clock, put a stop underneath, and very likely you'll stop out. But if you don't and it just keeps going up, you can just follow it up. There are a number of ways in which you can exit like that. It is about maximizing the gains and minimizing losses. So when things go the opposite direction, let's say the indicator said up and then it starts down, well, maybe being patient and allowing the market to push it back up to maybe break even or less of a loss is the right way to go. And so you can make those audible calls throughout the morning. But if you are having trouble with exiting, I highly recommend just setting a time, 9:45, 9:31, 10 o'clock, and just every day, just that's when you sell until you have a good sense of it. All right. Is it okay to trade on neutral days? Of course it is. But you should have more information. Again, on SPY Tomorrow, we have a lot of different types of signals that help us understand. Look, most of the big money is in puts right now. And if the signal says up and it's a very weak signal and most of the pressure is really down within the other signals, you might want to be careful, or maybe just point down even though it's neutral up. Or maybe it's neutral down, but the trend was going up, but we just lost. We ended the day as the trend was going up, ended the day. So we'll have to make those judgment calls. But if you're unsure, you can always do a SPY T trade, do a ratio trade. The signal says up and there's a lot of support for up around that signal. Well, then, hey, buy a overnight DTE1 with a delta of 50 and a minus 0.25 put. And now you have a ratio trade. And so if it goes completely the opposite direction, you'll minimize your loss as long as there's some sort of a move, minimize your loss or even gain. It's very possible. I've many times made money on big days in which I had a ratio trade and the market went flying the opposite direction. But it went so much that my put or my call hedge just made a lot of money. So you just have to weigh it and decide. You'll get your comfort zone. You'll feel honestly, if this gets really boring, you're doing it right. If trading is exciting, you're doing it wrong. What we're looking for is a high risk. Yes, we can appreciate those big days, of course. But if it's always this emotional up and down, that's what we're trying to get away from those day trading days. And so yes, we're going to appreciate the big wins, and we're going to try to work our way out of those losses and at least minimize them the way we can. But the number one thing you should never do is double down. Let's say the market goes the opposite direction. You say, well, I still think it's going to go up. I'm going to double down and make money. Don't do it. I have lost probably the most amount of money doing things like that. Go through with your trade and get out. And if you have another signal, a day trading signal that says, hey, this is a good time to get in, that is a different trade. Let your trade complete. Don't add to that trade. Don't double down on that trade. Just go through with the trade and then make a new trade if a different signal warrants. Next question, what percentage should I risk? Again, 1-2% is the best, but you may not have $100,000 to trade. So, or even 50,000 or 25,000. So maybe you have $1,000. So maybe the answer is maybe no more than 10%. If you're really high risk and have gone through this a number of times and you're starting to build and you actually have some profit to risk further, well, then increase that amount if you feel like going to 20%. But if you start to lose, then pull back because you don't the name of the game is being there for the next trade. And if you blow up your account, you're not going to be there for the big opportunities. Quite often, the big opportunities happen a few times during the month. There are a lot of average days, not much movement. And then there are like three, four, maybe five big days throughout the month. You want to be there. You want to be a part of that. And so, blowing up your account is not the way to do it. And so keep that risk as low as you can, where you're still making money that you feel like it's of value to you, but not beyond your risk tolerance. All right, what is the best DTE? Date till expiration. This is for the options traders, not for the people who are trading the actual ETF stock or the TQQQ or SQQQ. These are the people who are trading options, and again, dates till expiration. And I have been trading one DTE more and more with the knowledge that, look, I'm going to lose half my money if there's no market move. But, a smaller position size, I'm comfortable with that fact. But I also know if the market moves, I'm going to have a really big move and it's going to be worth every bit of risk of that. But if you want to be a little safer, 4 to 7 days still is a sweet spot. You're just not going to have those huge home runs as often. But you also may not lose half of your position each time either. You may lose 25% of it, for example. But again, it just depends. But the goal here, obviously, is to have more up days than down days. And when we can do that, we have a growing portfolio. Okay, last question. Can I trade other options? Yes, you can certainly trade. QQQ has a higher volatility, and it really a volatility between 20 and 30 is amazing. But we get into low volatility during the summer, and sometimes we need higher volatility stocks to work with. And QQQ is a good one during the summer because SPY can have an IV of like 10 or below, and there's just not much movement. And you need to understand what your hurdle rate is. And we have some calculations in SPY to help us understand what our hurdle rate is. The hurdle rate is considering that time decay overnight. And let's say you have a $100 option and the hurdle rate is 0.15. So that means the market needs to move 0.15. You know that the market needs to move 0.15 in the SPY for you to start making money. So if the market opens up, like the indicator said, but only moves up 0.05, you're probably losing money. And so knowing that is helpful. And if that happens too many times, it's like, okay, SPY is not really moving much right now. Maybe I need to try IWM. IWM works pretty well, often moves with the market, but sometimes it does not. Sometimes it's the opposite of the market. So you have to be aware. You need to watch those trends. So you should have those backups. Mine are SPY, QQQ, IWM, and there are other ETFs out there that people like to use, other stocks they like to use, Apple, for example. So yes, you can. And I do have a QQQ tomorrow, and I will have others. I'm just in the process, spent the summer working on them. So I'll be launching them throughout the end of the year. I'd hope to actually have them done by the end of the summer 2025, but they'll be ready for 2026 as we kick off the 2026 year. So anyway, I hope I've answered your questions about SPY Tomorrow. If you're interested in joining SPY Tomorrow, you've done some tests, you've watched the market, you've done some paper trading, and it looks like, wow, I've really done well here. You can even test, you can go into your brokerage account and just look at the end of the trading day. That's how you do your paper trading. What are this option worth? What is this option worth for SPY one day out? And then what is it selling at, the next morning at the open? And you can have a good sense of how it works and do that a few times. And then put a little bit of money into your account in your high risk, high reward section of your portfolio and try some light trades just to get a feel of how it works. And if you've never traded options, maybe during the day, you could just buy a call and then immediately sell it. So you get a sense. You may gain 10 cents or $10, or you may lose $10, but it's a learning experience. You need to understand how you would go through the process and how you would buy at the end of the day and sell in the morning. So these are the things, and even learn how. What buttons do you push to sell with a limit or market call or a specific time? How do you set up the time to sell the next morning? Try those things. So maybe buy a call at noon and then have it set to sell again at 12:15, 1 o'clock, just to see how it works. Test everything out before you commit to larger amounts of money, and that includes joining Spy Tomorrow. You have to really understand why you want to join Spy Tomorrow, why you want that additional information. Why do you want to ask me questions in the chat? Why do you want to know the hurdle rate? Why do you want to know what the underlying mood of the market is? If you know why, then it's a good idea to become a member. And of course, there is a button below to join. And if you have questions, you can always ask me questions before you join. And you can catch me at Rosh, R-O-S-H, at spytomorrow.com. I look forward to seeing you on the inside.